Ladies and gentlemen, welcome back to the channel. Here in this video, we are going to be going over my expectations for AMC stock in the broader markets in this upcoming week. Go over all of the data that you need to know. And I will tell you right off the bat, we have GME earnings coming out this week, and that could be an important catalyst for AMC stock. We'll talk about that in depth here in this video. Hit the like button as well as subscribe to the channel, and let's go ahead and get started. So last week for AMC was not great. I'm just going to put it out there. If you're a bull in AMC, you need to get above that 50-day moving average. If you get above that 50-day moving average, then things start to look really good for a run back into the sixes. Okay. If that happens, now your 50-day moving average is currently at $4.36 per share. So that would be a rise of, let's call it 26 cents from here, considering the 2-cent higher move we've seen in after hours. Is that possible? Of course. That's less than a 10% move from here. You're very close to that level. If you cannot get above that level, though, you're going to be in for a problem, and AMC stock is going to fall. I think by far the biggest catalyst for this week, at least the beginning of the week, is going to be GME earnings. Now, I have no specific expectation around GME earnings. I could look into it a little bit more, but overall, I would say just judging on the stock and judging on the state of the markets, the expectations are pretty low from GameStop. If they can come in with a surprise profit, announce anything good, then that's obviously going to be great news. And GME reports earnings Tuesday in after hours. So I do have an upside bias on GME. Unless things were really bad, unless things just did not go the way that they expected, I think GME is going to beat the earnings estimates. You also have other companies like Rumble, Restoration Hardware, Braze, Playboy, all kinds of different companies, bunch of random companies, to be honest, reporting earnings this week. It seems like earnings season just doesn't ever end. And this week continues earnings season, but not your notable names, nothing that's going to move the markets or be important really at all. Besides GME for AMC specifically. AMC and GME, they go hand in hand. So they're going to be very important for each other. If GME has good earnings, I expect AMC will go up as well. If GME has bad earnings, I expect AMC will also fall. Now, depending on what GME is pricing, AMC may be a cheaper option to play GME earnings as far as a sympathy trade. And that could give AMC quite a big move this week. And that's going to be interesting because this is the first earnings in a while where it feels like you may not get much of a sympathy move with AMC, but I think you will. I think the algorithms are really programmed AMC GME, AMC GME. Good news for one, good news for the other, bad news for one, bad news for the other. That's what it seems like to me, albeit I could be wrong. That would be my expectation. So that's going to be one of the biggest catalysts coming this week. Now, you do have a full slate of economic data coming out this week, and I'll start with Monday. I'll start with tomorrow. So tomorrow you get Fed Bostic. Now, I want you guys to keep in mind that the markets are richly valued right now. They are fully valued. Things have to go perfect to sustain these valuations in the broader markets, in AI stocks, right? Certain areas of the markets. If you look at the dot plot, the average Fed official got a lot more bearish in this last dot plot. Take a look at this right here. This right here. Back in December, the lowest estimate from any Fed official for the federal funds rate by the end of 2024 was 3.9%. Now the lowest estimate is 4.4%. So that's a 50 basis point increase on the lowest, the most dovish Fed officials dot plot. That's crazy. The fact that you're still at 4.6% for the federal funds rate, that didn't move, and you're still pricing in 3 rate cuts by the end of this year, is quite crazy. That's what the markets responded to. But if you actually look at 2025 and 2026, you're expecting less cuts from the Fed, higher federal fund rates, and the longer run rate is expected to actually be a little bit higher as well. So the dot plot itself was quite bearish. I think Jerome Powell really just put it home in the bull camp on the press conference. Jerome Powell was so bullish, it was sickening. So confident inflation is just going to come right back down, that they're going to be able to start cutting rates soon. We do hear from Powell this week, and he could walk some of that bullishness back that we heard on the conference call. I don't know if that's going to happen, but it is a possibility, and we'll talk about it once we get deeper into this calendar. But Fed Bostic speaks at 8:25 p.m. Fed Bostic on Friday said that he's only expecting one cut now, that he was expecting 2 cuts at the last meeting. So Bostic's definitely not the one with the lowest dot. He's only expecting 1 cut now this year. And that's if inflation just really moderates from here, right? If inflation continues to rise from here, that's not going to be good. Now, at 8:30 in the morning on Monday, you're also going to get the Chicago Fed National Activity Index. That's expected to be a negative almost 1%. Last month was negative 0.3%. So you're expecting quite a negative number there. New home sales for February as well as month over month are coming out, expecting a slight uptick across the board, 3% for new home sales month over month, and about 10,000 more sales that are new home sales. Some bond auctions come out, and then at 10:30 in the morning tomorrow, you will hear from Fed Cook as well. I think the Fed officials in their speeches, they're going to be pretty hawkish. They're going to really try to push back on some of what Jerome Powell said and how bullish he was, I believe, in these speeches. Now, we'll see. That's just my expectation. Now, coming on Tuesday, you are going to get the first bit of big data for this week. That is durable goods orders month over month, expecting 1.7%. The last month we had was negative 6.1%. But keep in mind, even if you're positive 1 or 2% month over month, you're still coming off a negative 6.1% number. So, I mean, that's still not great. That's still not a great, data report, even if you are positive. Now, if you're negative comparing to a negative last month on your month over month, that could be very negative, and that could get the Fed's ears popping a little bit more to maybe the economy is weakening a little bit more than expected. Now, S&P Case-Shiller home price month over month and year over year, expecting negative 0.1% for the home price month over month and positive 6.8% year over year. So we'll see what happens there. CB consumer confidence comes out at 9 o'clock in the morning, 10 o'clock in the morning actually, on Tuesday, expecting 106.7. Richmond Fed manufacturing, Richmond Fed manufacturing shipments, and Richmond Fed services will also come out at 10 o'clock in the morning. Dallas Fed services index and Dallas Fed revenues come out at 10:30 in the morning on Tuesday. On Wednesday, very slow day. You really don't have much of anything going on. You do have a speech from Fed Waller at 6 p.m. The Bank of Japan summary of opinions at 7:50, some bond auctions, but nothing too crazy. On Thursday, you're going to get the GDP growth rate quarter over quarter, final numbers for Q4. Look at this. The last estimate we had for Q4 GDP was 4.9%. We're expecting this to fall to 3.2%. Still that's a very strong number, but that's a huge downward revision if that's what we get. And that would show the economy is definitely not as, hot as we think it is. At 9:45 in the morning on Thursday, we are going to get the Chicago PMI coming out, expecting a number of 46. Last month was 44, so that would be good if we come in higher there, at least good for the economy, maybe bad news for the Fed. Pending home sales month over month and year over year are expected to come in positive as well. Last month, they were really negative 8.8% for year over year and negative 4.9% for month over month. You're expecting positive 1.5% month over month, and year over year expecting that to be positive 2.4%. Lots of other data here. Kansas Fed Manufacturing Index, 5-year inflation expectations, all kinds of different things coming out as well. Just smaller data points on Thursday, really nothing to move the markets. Friday is actually your big day. Friday is the day that could get AMC stock moving alongside GME earnings, right? GME earnings are going to be very important Tuesday and after hours, but also Friday, because you're going to get core PCE month over month, expecting that to be negative. Yeah, not negative. Positive 0.3%. Last month was positive 0.4%. 0.3% is better because you're not rising. But if you come in at 0.4%, that's really not going to be good. So definitely be on the lookout for that. That's probably going to be the biggest data point here. Personal income month over month expected to be 0.4%. Last month was 1%. So that's huge. We'll see what happens there. Personal spending month over month for February expected to be 0.4%. I think that's going to miss big, and that can have implications for the economy as well, considering over 70% of GDP is based on the consumer spending money. You are going to get PCE month over month and year over year, as well as Fed Jerome Powell that will be speaking at 11:30 in the morning on Friday. See if he really wants to push back on some of those super bullish, super dovish comments that he made last week. That is his chance to really do so alongside the other Fed members. So what is my opinion this week? I actually think AMC stock's going higher this week. I wouldn't be surprised if you break out above that 50-day moving average. Now, I've said it before, and I've been wrong, but I do think GME is likely to surprise to the upside, if anything, and that could have a positive effect on AMC. And then I think really on Friday is going to be the fireworks with the data coming out. If PCE comes in lower than expected or right at expectations, that's likely to be very positive for your small cap stocks, as the Fed will be able to actually cut rates, and maybe it makes sense, quote unquote, makes sense for big money to start going back into interest rate sensitive names. Now, if that's the case and money does start to go back into interest rate sensitive names, well, that will boost AMC stock right alongside your other interest rate sensitive names as well. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.